Hello everyone, this is Dan Hussey, and today I'll be taking you through the Eurodollar trade setups from this last week, as well as looking at the Eurodollar going forward. As I speak, it seems to be breaking highs for the day here into the close, and I will now take you through exactly why that is and possible targets going forward that are likely above 148. Okay, so starting back in the beginning of March, we had the beginning of a new trend. Effectively, this trend started from the 137.50 lows. We held a 50% retracement, a full halfway back. From these lows, we proceeded on through targets and blew through targets. Then on the next retracement, we basically held from prior entry to new high. We held our 50% entry levels and consolidated in a wedge pattern. Basically a triangle, which we'll take a look at the Elliott wave count in a moment, a triangle that consolidated in a wave 4 before this breakout higher. This consolidation lasted for nearly 2 weeks, well really 2 trading weeks, but was more or less 9 days from start to finish. Post the break of this triangle higher, we began to see a pattern, a trending pattern occur over the last week where the dollar was sold at the NYSE open. Like clockwork, you could literally set your clock by this. 80-30 every morning, US dollar sold off. And this trend began on 3:30 at 8:30 in the morning. The dollar was sold off, and so long as you kept buying every 50% halfway back, the trend continued. I'll take you down to a 15-minute chart here so you can see more in detail exactly how I ended up trading this. There we go. All right, so this is a 15-minute chart again of the Eurodollar, beginning on the at 3:30. That's March 30th at 8:30 in the morning Central Standard Time. So that's at the NYSE open. The dollar sold off. It then had a sloppy retracement that actually came down to test our prior support and resistance trend lines here from the wedge pattern. Those held, and we proceeded in a 200 pip rally that day. We actually took a long signal at 141.10 and took it to new highs. We then held that. Now began our new trend. We started from entry to high, held the perfect 50% pullback where we added and doubled down on our position, putting us long 10 units here, 5 from 141.10 and 5 at 141.60. Those 10 units we took up to target. That target is a negative 30 or 23% retracement, or the 123% extension of that move up at around 143.10. I do want to point out that because of that larger time frame long, which was filled at the 140 level, it had targets of 143.40. And if you notice, we held that nearly within 10 pips of that target, we held a high. Thus, we ended up covering that long, and we ended up taking, buying basically the next halfway back. So you go from entry to target high, full halfway back. We ended up re-entering the trade in a full position at the 142.55s, at which point we ended up with a 144 target. Today we ended up booking half profits at the 144 target, and from there, because we only booked half profits, we're looking now higher, and I'll show you why in just a moment. We do look like we want to. The market wants to close as close to 145 as it can, and based on the momentum that each push higher has gained, I put us in what is called wave 3 of 3 up. The point here is that now we're going to probably move from what are called traditional entries to extension entries. In other words, you go from your breakout high, so the previous high where we're blown out, because if you take this prior entry, right? So if we have a target here at 144, we've blown through that target. Now we go from high to high, which we can just imagine will end there. And now we're looking for a 144 level to hold, basically as support. The invalidation is the 61.8% at this time. However, if the market so chooses to keep with its pattern of traditionals, we go from entry to high, and we're looking now at a bearish pivot line at 143.20. So effectively, I'm looking for us to be bullish above, bearish below the 143.20 area. All right, now I would like to take a look at our euro-dollar. We were tracking a couple of counts. The least bullish of which and least bearish, so our kind of middle count, is a completed a 5-wave set that is looking to complete itself up. It does look like now with the new high we would be probably putting out in a wave 3 of 3, which would effectively make us believe that possibly this count is not in play, but it still could be. It is definitely valid with the wave 4 triangle, E wave not permeating into the wave 1 invalidation, and we do look like we're heading higher. So if we do get consolidation that remains above basically this 142.30 area, and we do break to a new high, we could have completed 5 waves up from that wave 4 low, which would suggest a reversal somewhere right around this 145 area. The ending diagonal count that we were following and tracking has now invalidated itself. We did move to target on it. However, this count now makes the wave 3 of that ending diagonal the smallest. Thus, it is invalidated. And the final count that I'm actually starting to favor, the secondary euro-dollar count, actually is moving now up in an impulsive 1-2-1-2s, and it looks like we are in our wave 3 of 3. I look for some consolidation to happen in a shallow wave 4 before we start pressing higher in this larger X wave. That is an X wave on a larger time frame, basically on a daily time frame that could extend all the way up to 148s. So that's actually all I have for you today. I stick by this analysis in the belief that where support actually did hold with the S&P 500, which remarkably held this 113.22 area of support in the cash index, suggests that we are in fact heading to a new high. And the fact that we broke below this range and are now trading back above it in this consolidative range that we went into for the last 7 days or so, this 15-point range, suggests that we just put in our wave 4, possibly the C wave of a wave 4, and are now going to be heading to new 2011 highs sometime next week. I do believe I'm calling for new 2011 highs next week in the S&P and a push above 145 easily in the euro-dollar, probably extending up to 148. Again, I'm Dan Hussey, and I hope you enjoyed this video.